Yeah. Two. Yeah. Aye.
Yacht over money.
I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the broad days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What up, what up, what up, what up? It's your partners back in the saddle again. Always looking better than you, man. And welcome again, guys, to Real Estate Friday, guys. Cliff, what it do, baby? Holler at the people, man. What's going down big time?
Hey, what's good? What's good, man? It's been a good week. Been a good week, man. So everything's moving along, man. How's your week
It is.
going?
It was good, man. I did a lot of negotiating, man. I probably negotiated on one deal. It's a pretty big deal for 72 hours straight.
Oh, wow.
It was 3-4 days. I'm just negotiating. I think we may have a deal in place. I'll know most likely by this weekend if we do or not. But it is probably one of the biggest deals of my life. Yeah.
Mm.
Yeah, man. So we gonna see what's going on, man. But bruh, man, I gotta ask a question. Did we get the bag?
Oh, yeah. We got the bag, yep.
The bag. We got the bag, baby. Man, y'all, every time, y'all. And before we get started, y'all, we gotta always say, man, take the picture for your mom and them guys. And guys, you know how we dive into this thing. Let's get right into it. This is the current market analysis, guys. We're gonna play some videos for you guys. Some information may shock you a little bit. Me and Cliff are going to respond to it, guys. But let's look at it and see what's going on with these rental rates. I see Steven. What's up with you, baby? Here we go. Here we go, y'all. Let's see what's going on with the market.
Landlords are now doing mass evictions in the U.S. rental market. They're kicking tenants out of their homes in cities like Nashville, neighborhood behind me. The evictions here are up 30% more than they were prior to the pandemic, and they're going to keep increasing. The landlord, they jacked up the rent too much over the last couple of years.
Wow.
Rent went up 20, 30, 40% in certain cities during the pandemic. Wages and incomes, they didn't even come close to keeping up, which is now causing lots of tenants to go into default on their lease and get evicted. And what's scary to me is that these evictions are happening when the unemployment rate in America is still only 3.7%. The unemployment rate is very low. There's already this big surge in evictions. So what is this going to look like over the next 1 to 2 years as the recession gets worse and the labor market worsens? I have big concern for the tenants and the housing markets in cities where these evictions are happening, particularly in an area like Miami, where the average renter now needs to pay over 50% of their income on rent. Evictions in Miami are surging, as they will in lots of parts of the Southeast and Southwest in America that boomed the most during the pandemic. Watch out for this trend in the second.
So, guys, man, Cliff, man, brother, man, that is, woo, brother, man. What you think about that from an appraiser standpoint, man? What he's talking about? Give your thoughts on what he's talking about, man, concerning this. What's going on, brother?
Yeah, he's talking about the pullback. You know, when inflation went way up, the rents were going up higher over month, and that's not sustainable. So
Yep.
all those people who got those rents month over month on the increase, when the market slowed down and their money's not going as far, they can't pay their rent.
Yeah, they can't do it at all, man. But the thing about it, guys, is that's why I always say I look at the fruits, guys. What's going on? The fruits. What's going on behind the scenes? He pointed out a point. He said unemployment is low, right? But we're still having mass evictions. So is something funny going on with these numbers? Because the fruits is telling me something totally different. Because, Cliff, is it reasonable to conclude that if unemployment is low, everybody got a job, right?
Right. Yeah.
Right? So if unemployment is low, everybody has a job, people making income, how can you have mass evictions?
If you too much of the if you have low supply of market, if you have low supply, then demand was high, and so people start over leveraging themselves to get into a property because there's none available. And then when too many people do that, you get mass eviction.
So when you say over leveraging, how are they over leveraging themselves?
Get into properties they can't, especially from Miami. I mean, if you're moving to Miami, which they got a lot of people moving out there, they have a
do.
lot of demand. Because of that demand, people wanted to start increasing the rent. And some people, in order to stay in Miami or even move to Miami, they had to pay that rent.
So what you're saying is the influx of foot traffic to Miami, you had some, I ain't gonna lie to you, some greedy investors said, hey, I'm gonna jack up these rents a little bit because I can. That actually drove people out, so to speak, out there to actually buy those, not buy it, but lease those properties. But what happened is because they over leveraged themselves, they can't afford the payment at all anymore. I'm rocking with that, but then I got to come back to the question. He pointed back to the unemployment number being low. If people are working for a living, right, they should be able to afford these payments because they're moving to, let's say, Miami, because he used that as an example, with a job. So they have a job. How can they not afford a lease payment?
If demand is high, so that happens in every big city. So that's like
Gotcha.
New York, Los Angeles. You can go overseas. London's like that. Tokyo. Any big city is going to have so much demand that they basically play by different rules. If you go to New York, nobody can afford anything out there.
Yes, I agree with that 100%. And I'm asking these questions to Cliff because of the fact that just want to give you guys a kind of a macro context of what's going on as we kind of look and observing, because you guys are investing time with us to really kind of learn from us. And we want to make sure we honor your time. Now, you just seen a video talking about mass evictions. Now, what has happened since those mass evictions? I'm actually glad you asked, because who are actually buying these things, Cliff? It wasn't smart investors like ourselves. It was Wall Street, right? So
Yep.
what did Wall Street do? Let's see what's going on now that Wall Street, I'm going to say the unwise investors, the desktop investors are trying to get active in the market. What's happening to the properties now? Let's see what's happening. Here we go. Let's go get it.
Wall Street landlords are running into some big issues, like on this property behind me in Nashville. A Wall Street landlord bought it for $340,000 over a year ago, and it has been sitting empty since then. If you look at the listing on Zillow, they've had to cut the rent a whole bunch of times. They can't find a tenant, which means this Wall Street landlord has been losing money on this property for over a year. And in fact, they tried to sell this property earlier in 2023 and couldn't even do that. And this is a broader trend, the issues in the rental market. Companies like Realtor.com and Apartment List are reporting how rents are declining and vacancy rates are going up. And ultimately, this is going to cause capitulation and attrition for these Wall Street landlords at some point later in 2023. A bunch of them are going to be forced to sell the longer that these properties sit vacant and the longer that they lose money on them. So pay attention in your neighborhood. If you see these empty rentals, it's a signal the housing downturn is about to get worse.
Ooh-wee, Cliff. Ooh-wee. Guys, newsflash. Cliff, did this same thing happen back in 2008, big time?
Oh yeah. Yep.
So it was the company back then was called Silver Lake. They went out and bought like 300 properties a week. It was the dumbest move, and they could not renovate these properties fast enough. So they actually stayed vacant. They actually had software that was so profound. It was so tight. They could analyze. They could find, analyze, and make an offer and close in 7 days. It was crazy what they actually had, but they were unwise in what they were doing. Then what happened was this here is properties set vacant. So what he's saying is nothing new. This happened before. Cliff, am I lying, Doc? I'm on point.
Nah, you ain't lying. right? You know, and I think that the situation could get worse. I think when they drop the interest rates, which I've been calling for a minute, when that happens, you're going to see supply hit the market, which is going to drive down rent prices even more because most people have been holding on. They've been waiting to sell, waiting to rent. Now, when they start seeing the market start getting loosened up a little bit, watch what happens.
Yes, sir. And I'm glad you actually said so, guys. What he said about property sitting vacant, there are 12 million homes in America that are vacant. Let me say it again for the folk in the back row and some in the front row too. 12 million homes that are sitting vacant in the U.S. Not built. They're built and vacant. What he's saying is actually right. And a lot of these homes are owned by these Wall Street people. Now, here's a news flash, guys. Don't get too mad, all right, guys? Wall Street did not use their money to buy these homes. They used your money. They used your pension money to buy these homes. They did that. And they paid 25, 30% over the asking price for these homes with your money. Right? So they knew they were buying wrong in the first place. Now you see these properties now sitting vacant. So now there's going to be a downturn when it comes to that settlement at this kind of price point. They're not losing no money. You're losing money. You are. Sorry. They're going to come in themselves with their own money and buy them at a deep discount, like your partners. We try to tell y'all, man, this ain't no game, man. It's chess, not checkers. You guys are playing. Some people are playing checkers, and you're getting hosed. It's chess. Period. Cliff, am I off base? How have been done? Let me know.
Nah, you know, you gotta understand each element of the game so that you could play it correctly.
Got to, man. And guys, it's nothing. And I don't mean to be too harsh, guys. It's because we've been doing this for how long, man? As far as doing these lives for what, a year and a half now, man.
Yeah,
so to speak. Over a year. Yeah, a little bit over a year, man. It ain't changed, y'all. We told you this was coming. We weren't playing. This ain't no game. We told you it was coming. But anyways, guys. Now, guys, let's go a little deeper on these rental rates that are dropping. Okay, let's go a little deeper on this thing, guys. All right. Boom. And then me and Cliff will talk about where the economy is going and also answer a question that we always get. You'll see in a second. Here we go. Here is another video. I like this guy's content because it's all data. Detail. I love it. Here we go.
Landlords are being forced to cut the rent, with data from Apartment List showing that 57 of the 100 largest cities in America now have declining rents, with these rent declines especially severe in cities like Las Vegas, where some landlords have had to cut their rent by as much as 25%, which is great news for renters out there, but it's potentially even better news for home buyers because the history of the US housing market says that when rents go down, home prices go down. And the mechanism that's going to cause the prices to go down is landlords selling, because right now lots of them are losing money with their cost of debt, the orange line, which is roughly equivalent to the 30-year fixed mortgage rate, hitting 7% in June. Now that cost of debt, it's way higher than the cap rate or the rental profit for these landlords, which means that over the last 15 months, any landlord pretty much who's bought into the US housing market with debt is losing money on their rental. Now lots of landlords didn't mind losing money initially on their rental because they thought that rents would continue to go up, but now many of them are realizing they were wrong about that, particularly in a city like Austin, where Progress Residential, one of the biggest Wall Street landlords in America, has this rental on the market for $2,500 a month. Now that's roughly equivalent to what it was listed at 2 years ago in June 2021, meaning no rent growth in Austin over the last 2 years. However, Progress Residential's expenses have gone way up during that same time period, with their property taxes in particular increasing by over 50% from $6,000 a year to $9,300 a year, which mixed with an increase increasing cost of debt makes it very likely that Progress Residential is now losing money on that rental in Austin that they purchased 2 years ago. Now, are they going to sell? I don't know. But here's what I do know. According to the U.S. Census Bureau,
Okay.
there's 17 million single-family rental homes in America. In addition, there's roughly 6 million duplex and triplex rentals, meaning in total that roughly half the rental inventory in America is single-family duplex and triplex, much of which is owned by small mom-and-pop landlords. Now, these small mom-and-pop landlords don't have the same access to capital that a big Wall Street investor like Progress Residential does, so they are likely struggling behind the scenes right now. That's what these declines.
But here's the big thing about it, guys. I'm gonna stop right there because he's going in a little bit. That I smell opportunity. I smell it. You smell it, Cliff?
Yeah,
I told everybody Austin was overinflated. I told everybody Austin was overinflated. I told everybody in Texas, that's the worst rent city in Texas. Austin. Overinflated. I am not surprised at all by this at all. I expected this. But guess who's going to Austin? Your partner. Your partner. We're going to go to Austin everywhere. We coming. Cliff, man. What do you think, Doc? Talk to people, man. What's going on with these rental rates? This is a licensed appraiser, okay? So what are you seeing in the market, Cliff?
Yeah, I say the same thing, that basically when the inflation went up, it topped out. They went, you can only push it so much. And then when the Fed came in and said, hold up, we're going to just raise rents, we're going to put a hold to all that. Now, exactly like he said, the interest rates that you're paying for the property and the rent ain't matching up.
Not at all.
So now everybody who bought, who didn't do their due diligence correctly in 2021, who wasn't prepared for what just happened for 22 and 23 and some of 22, they're getting hit hard right now. And I'm on the same end they are with the taxes. And Texas is a problem. My taxes on my rentals went up crazy.
They did.
Crazy.
We got a question on Instagram, Cliff, by my man. I call him Aaron or Aaron. His question was not at all, bro. He said, "Is Dallas better than Austin right now?"
Depends what you're trying to buy.
Okay, unpack that for him.
You know, Austin is a city that's going to keep growing, but I would say it's a luxury town.
Yes,
you're going to find higher priced properties out there. If you come to Dallas, you're going to find better discounts.
Yes,
especially in the surrounding areas around Dallas.
Oh yeah,
you know, your Mesquites, your Garlands, you know, South Fort Worth.
Yeah,
you can find better deals in Dallas, but appreciation is going to be strong in Austin.
Well, I would say appreciation, but with a expectation of a significant pullback, because Austin is so overinflated. It's so overinflated right now. It's ridiculous. It's so overinflated right now. It's crazy town. But money flows through Austin, though, from a political standpoint, just like D.C. Austin is Texas, D.C. Money flows through Austin, if that makes some sense, guys. So there's going to be a lot of pullback at Austin. But in Dallas area, you look at Fort Worth, untapped. Arlington, untapped. Halton City, untapped. I'm giving you guys some jewels. Keller, untapped. If you want to go in the DFW Metroplex, I will go into the Tarrant County Metroplex, the Fort Worth and Arlington Metroplexes. No one is over there. I don't know why. Because you have the Cowboys over there. You have the Rangers over there. You have XFLs over there. You have all this stuff is over there. Dallas has done a crappy job at keeping their sports teams besides the Dallas Mavericks. And they may leave. Yeah.
There's a huge opportunity near TCU.
Ooh.
That area is great. I mean, it's been blowing up. I've actually owned 3 or 4 properties in that area, and each one did well. Never had a bad property in that area. So if that's what you're looking for, the other area, depending on what you're trying to do, if you're trying to buy and hold and trying to get appreciation, a strong appreciation, Oak Cliff.
Yeah. Oh,
that is one area I've done a lot of appraisals in that area.
Unpack that for him, Doc. Unpack that for him, Doc, because South Dallas, man, is woo. Go ahead.
Yeah. So specifically Oak Cliff. Oak Cliff is blowing up. Big money is coming into Oak Cliff. The city is trying to pay attention to that area. So it's a lot of old houses over there. being completely
Yes.
renovated and even knocked
Yes.
down.
Yes.
And there's still
Yes.
a lot of old inventory that you can buy. And you don't have to see, this is what I've learned. You don't have to fix it up today. What
Mhm.
you can do is you can buy it and rent it today. And then when the rest of the area gets built up,
Yes.
then you do your renovation.
Yes. Write that down, y'all. Write that down. That right there could make you millions. He is
Mhm.
not lying. Specifically in the South, I would do the same thing in Memphis. I do the same thing in Nashville. Like Tennessee is a place that we're in. Mississippi, like in my opinion, the state of Mississippi is untapped. It is untapped, and I'm gonna tap into that thing. I sure am. I'm tapping to Mississippi, and also I'm letting you know right now when they come to South Dallas, I'm looking at the area as well, also to buy. We got some things planned, guys, in real estate, man, that's going to shock y'all. And we're going to give access to all of this, our capital, our knowledge, our resources to you guys as well. So you can so you guys won't be able to sit on the sidelines saying, look at Dale and Cliff. You're going to be in the game with us. Okay. How do you begin to build a business is the person that builds a platform that allows for people to plug into and scale, then everybody begins to scale and win. That's what we set up on when it comes to our real estate training, guys. It's real simple. Now, Yakini said, whenever I go to Austin, Round Rock is where I go. Yeah, I agree. I ain't trying to go to downtown Austin unless I'm going to a UT a University of Texas basketball football game. Arlington, downtown Arlington's trash. No. Now they do have one of the best barbecue spots in the state though downtown.
Mm.
God, man, I'll get fat there. I can't go there because it's so good. It's world renowned. I
Man,
forget the name of it, man, but it's so good. I'll just drive
he
that.
naming. I'm about to get barbecue after this call, bro. This.
Man, well, I'm finna make some barbecue chicken after this call while you tripping. You talking about you're tripping. My man Scott A, man, he's an Instagram guys. Guys, everybody on Instagram or other platforms, follow offscript_TV. This is HBCU, the voice of HBCU sports. Scott A, man, he just got married, man, last week, man. Man, I hate that I missed it, man. I was taking care of some business, man, but that's my dude, man, brother. Scott A, man. But anyways, now Cliff. Where do you see the economy going? And then we get on to the question. Where do you see the economy going, man? Move forward. What do you think?
I think what I see is the next. I'm calling a bull run for a number of years. It is going to be a bull run because this is what I think. We pumped in trillions of dollars into the economy.
Okay.
We pumped in so much money, it caused inflation to go 9% in a year.
Okay.
I will ask you, if we didn't do nothing, if we didn't raise interest rates,
Okay.
right? What would happen to inflation? It
Mhm.
would keep going because there's
That's
so
right.
much money. And Dale's been pointing this point out. All of it hasn't even been spent yet.
I
We've
told
got
y'all.
hundreds of billions yet to spend. So the only reason why it's slow now is because interest rates are high. The second the interest rates start coming back, the money starts flowing again, and we are going to see a boom. What I think is they're going to keep the interest rates higher for a little bit longer. I think they'll pull back, and you'll see mortgages are about 7.5% right now. I think
Mhm.
they're going to dial it back to about 5.5%, and
Yes.
that's where they're going to stay for the long term.
Yeah. Here's my opinion. What Cliff has just said, I agree with. Here is the issue that I see is, and it deals with the executive branch and the legislative branch. They will not stop printing.
Oh yeah.
They will
Yeah, I
not.
agree with him. I agree with
So
that.
yes, that they've spent billions already, and it's haven't been spent yet at all, and they're going to continue to print more. That is the reason why I think it's going to get worse, just because the government, the legislative branch, and the executive branch will not be fiscally responsible. They won't, because of the fact that they're trying to win. They're trying to win elections. So, with that being stated, what is your counter move? What is it? It's you got to have one to to outlatest. Now we got a question from Scotty. He said, "Side question: what's going to happen in commercial because Walmart are dropping store malls and are losing business? What will happen? What will it look like? Well, in the commercial space, Scotty, man, this is on Instagram, guys. On the commercial space, we have tempered back our acquisitions of a lot of commercial buildings. I think Cliff talked about this previously on a Real Estate Live. Is the commercials taking a really significant hit right now because people are beginning to work more remotely, right? Or they have offices, but the offices are temporary offices. So they come in for a meeting and they leave. So it's not, people are not just coming back to the office all the time. And so what's happening is the brick and mortar type of businesses are going really to e-commerce, so to speak, remote, virtual. And a lot of companies save more money with you working from the house. They really do, and it works well for the consumer. Would that be the situation moving all the time? No, but that's what's going on now. So now what you actually see is a big inventory on the market. Typically, Cliff, let me know if I'm right. 6 to 12 months is normally a good time frame for inventory on the commercial side to be on the market, right?
Right. Yeah. That's about right.
Okay. If you go to New York, California, other places, you're looking at 48 months.
Yeah.
48 months. And you have even I was buildings looking at maybe even transferring from office spaces to apartment complexes. And that type of pivot is so significant. And it didn't make any fiscal sense at all because you got to put a bathroom in every single place. And that's not how commercial buildings are built. So go ahead.
I would say what I'm seeing with the commercial, what they're doing is they're going to the government. They're going to the government and they're saying, I need subsidies. I need tax breaks. I will turn this unit of this commercial building into apartments, but I can't do it on my own. I need some kind of incentive to do that.
Yep. And how much would that help? I don't know. I don't know at all, period. Is there opportunity in the commercial space? It really depends on the functionality of the space. If I was to buy a commercial building right now, I would buy more like a warehouse. Well, something that's flexible. You can run a business, 2 or 3 businesses out of there as well. Also, I'm looking at investing into a startup company in the next month or so, and we're looking at warehouse spaces right now. Not to acquire, we're going to lease it out, which would be fine because it's much better for us from a cash flow basis. But eventually, we'll look at buying something, and out of that place, I can run 4 or 5 businesses out of one spot. If that makes some sense. That's how I would look at it. I hope I answered your question, Scotty. Now, Cliff, man, in this market, should anyone purchase a home in today's market?
For what reason?
To live in.
To live in?
Mm-hmm.
Depends. If you're putting a good amount of down, then I would say yes. Because even though you have a high interest rate, you have enough equity with your cash you're putting down that you can refinance easily later.
Mm-hmm.
If you're only putting 3 to 5% down, it's going to be difficult to refinance that later if you're doing into it. So for me, I would wait. I will wait till the interest rates start coming down. If it was me, that's what I'm doing. I'm waiting on that. I think the interest rates are high right now. I think it's difficult to try to move in and get that. The only reason I do that is if I got a phenomenal deal. If I got a phenomenal deal, like something I can't walk away from, then I would do that. But for me, I'm waiting.
Yeah, I could, and that perspective is wise. I would say this here: if you're looking to buy a house for you to live in, look for a deal, which is great because this is a buyer's market. So look for a deal. But at the exact same time, if you really like a house and you really want to do it, just know that you're going to probably buy it with a higher interest rate, and be okay with paying more. And those that actually make money can actually do that. If you want to buy a house and make it work, but it may be a little bit out of your budget, it may not be wise to do that right now. But if you really want it, you may want to look at beginning a side hustle. real estate investing, financial services, even direct sales, a side business for you to begin to make that up that delta there, because you're buying a house and it's costing you more interest rate wise, which is costing you more monthly. I would be more of a hawk on this sales price, because and also if the
Right.
seller wants you to buy this property, I want some concessions. I want some concessions. In other words, I want you to give me some concessions so I can buy down my rate. I want to a 7-day option period. I want to pull an appraisal. When the appraisal comes back, I could adjust my sales price down to the appraisal amount. Stuff like that. I would ask for some significant concessions, but knowing that I'm walking into a deal that I'm gonna have to pay a little bit more because of interest rate. That makes sense, Cliff?
Right. Yeah, yeah. Now I understand if you really like a house, then you can't. Location is something you can't make up for. That's the best thing
Yeah,
you can do is get a good house in a
yeah,
good location. So if
yeah,
it makes sense, go ahead and do it. You just realize what you're getting into, and that
yeah.
hopefully in 3 to 5 years you can refi out of that.
Yes, yes. And again, guys, don't invest and hope. Invest and expect because of your plan. Okay? Don't invest and hope. Invest and expect because of your plan. Most investors invest in hope. And if you invest in hope, I'm going to see you at the auction. I'm going to be buying your crib and probably kicking you out. I'm just keeping it 1,000 with you guys. Let's just keep it 100 with you. We can work out a deal, so to speak. So, just guys, being a little bit more wiser and astute in your acquisitions, and don't feel bad if you lose sometimes. Me and Cliff, we've lost sometimes. You know what I'm saying? We've lost sometimes, guys. So it's not so much of a loss; it's what you've learned. What you've learned. I mean, I lost on the deal earlier on this year, and I had to take a significant haircut on the deal. Was I happy about it? No, but what did I learn from it? I learned that in this segment of real estate, which is luxury, is taking a hit. It's taking a hit. And so now I have to be a little bit more hawkish on my negotiating. And I'm talking about a hawk. A hawk. I want to add, we're making offers, guys. Like one offer that Cliff made on a deal in Jackson. Man, we offer like, how much we offer, Cliff? 18,000?
Yeah.
18,000. Now the numbers is crazy. I mean, it's great. We're making money in so many different ways and on a deal, but we're making uncomfortable offers.
Yep.
Uncomfortable offers. Okay, will they really accept this? Let's see. Let's see. So be okay with that, guys, and don't be afraid of this here, guys. Joint venture investing. Man, this right here has saved me so much money, so much time, and allow for me to scale my businesses quicker. You agree, Cliff, or you disagree?
Oh yeah, absolutely. I mean, if you can bring in somebody who has expertise and know-how, that's going. The one thing, okay, you could. Here's the thing. You could read a book. You can go in and try to do it yourself, or you could just ask someone who's already done it.
Man, I'm sorry. If I can call Cliff, man, I got a property over here in Dallas, Texas, man. It's a 322, 1,200 square feet, man. Here's my plan, man. What's the asset ARV value? Tell me. He can let me know
Right.
the answer in 1 minute versus me looking on Zillow and Realtor and like this. Nah, but you tell me that you got access to all the information that I need, man. You tell me. All right, cool. Does this make sense for the scope of work? All right, cool. Let's get it. So I've vetted one deal in 1 minute, but it took you 20 minutes to vet one deal. I've vetted 20 more. Weeks on one. Do you see the power of joint venture investing? It's powerful because it allows for you to scale and it allows for you to manage the most valuable resource, which is time. Time.
Yes.
Yes, sir. Cliff, man, you want to say anything, man, before we log off big time?
Nah, man. Join the Cash Flow Club. Hop on there. We always trying to get some more people on there. So you could add and we can contribute. I keep saying this. One deal could change your perspective. One deal. It was mine. I always thought, and I'll give you all an example on my first deal. I decided to just go for it. I went in. I had some luck. I had a decent GC at that time before he screwed me over, but I had a good GC at that point. And I'm telling you, I've tried to do many different businesses and ain't nothing been like real estate. When I got that first property and I sold it and I saw a $24,000 check in one go, that changed my perspective. I'm on to the next one. So just don't try to think too big. Try to just do one.
Yes.
You amazed how well you could do.
Yeah, I agree, guys. And we are going to do another free real estate masterclass, and it's coming soon. It's the summertime, guys. So we dads first, we husbands first, and dads second. So we got to make sure we balance our calendars, guys. We're going to do another masterclass, guys, for you. But when he's talking about the cash flow club or the cash flow bundle, is what he's talking about here. Is you get all of our training, everything, all of our spreadsheets, contracts, one-on-one time. You're part of the cash flow club as well. Also, $99. That's it. That's all it is, guys. Period. So we want to offer that because people ask us all the time concerning training. Here it is. But I would say this here, guys, is the masterclass is coming, and we didn't market for it at all last time, at all, and we had a full room. And so what we're doing is we set up a nice system to where you'll be able to on live scan the QR code, sign up for the free masterclass. It's free. It don't cost you no money at all. Period. And you can ask us anything about real estate, new construction, SFR, which is single-family residences, commercial, office space, warehouse, a GC, scope of work, interest rates, you know how to put a deal together, you name it, we do it all there. And it's 2 hours. It's 2 hours of one-on-one time with Cliff and I, guys. So it's just, man, we just want to set everybody up because we know what's coming. If you can position yourself to be ready to move forward when it's time to move, guys, you could change 3 generations with one right move. Does that make sense, Cliff?
Exactly, yeah. Like I said, saying one deal, you'd be amazed. You'd be amazed. So check it out. It's $100. Just check it out, and you got access to 2 people who've done a lot of deals. You got access to not just people who've done some deals, but people who have a lot of insight. It can save you a lot of time. So just take advantage. Take advantage of the opportunity. This is an opportunity. You got to take advantage of these things when they get put in front of you. You know,
That is
people say,
correct.
hey, man, there's a lot of missed opportunities. That's right here.
Yes.
That's right here. So you got to take advantage of it and just hop on, man, and make it happen.
That is it, guys. That's all we had for today, man. Well, we hope we added some value to you guys. That's for sure. Every Friday, we are here on all platforms, guys. We're trying to get on TikTok right now and other places as well. We'll have that up as well because people ask about it on TikTok as well, guys. And so, but guys, we thank you so much for the time, man. God bless you, man. If you need anything from us, let us know. But you know how we end it every single time. Before you leave and while you can, you see that thing, guys. Take that picture for your mom and them, guys, and holler at your partner, guys. Hey, God bless you guys. Have a good weekend. Peace.
God give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big